So what's up, guys? It's Buka here, the Scrub Investor. Today I got Darlington Invest with me, and we're going to be discussing the Yahoo article, and that stated about 2.3 trillion, that's trillion with a T, has been lost from U.S. homeowners. Now I'm going to read the article. It says, the title says, the U.S. housing market has seen a significant decline in value according to new reports from real estate broker Redfin. Now, of course, this is a Redfin article that Yahoo has summarized, right? So the total value of homes was about 45.3 trillion at the end of 2022, and it's down about 4.9% or 2.3 trillion from the record highs of 47.7 trillion in June of 2022. So that's a 6-month span in which we've seen a $2.3 trillion drop.
Right.
Now, what do you think about that, Dalton?
Well, I mean, a decline like that really isn't not expected. That's the one thing. So I would like to say that it's not expected because we got a couple of things we got to think about here. There was a decline again, 2.3 trillion. So we're looking at that from a super high at 47.7 trillion. That was like the biggest increase since '08, right? So we'll say that.
Yeah.
But we all know, because as investors we understand that, hey, this isn't sustainable.
Yeah.
Because if you understand the price of the real estate cycle, there is a point where it starts and gets high, and then we're going to the point where it starts to decline.
And even if you think about it, even at that time, it was time for investors to offload. A lot of investors were offloading because that was the top of value, right? I believe I sold 2 homes at that time, and when I made purchases at that time, I considered that these numbers, I had to make a purchase based off what I thought the actual number was before before the numbers went up. So that's, of course, something to consider.
Yeah, absolutely. So, but the thing that I want to bring up, and I want people to really understand, is that not only was this is back in June of 2022 where we had these record highs, but this article talks about going through December.
Exactly.
But there was a major program that came out last year, that if you don't remember, and that was Bank of America's minority program.
I
remember that zero down
Yep.
situation? Now, I myself, and I've told all the people who I know within my circle and anyone who follows me on Instagram, I said, hey, this is a predatory situation, or it's something that you can get yourself into a lot of trouble.
Yep.
And this is why. Because if you're looking to buy properties and you have a zero down situation and you're going on the MLS and you're buying at the top value, at the top of the market, you're setting yourself up to be underwater.
Yes.
And that's exactly what occurred. Because if you look at homes were sold at an average, the average now home price right now is about $383,000.
Yeah.
At the time, we're looking when this article is referencing back to June of 2022, homes were roughly around 400 grand.
I actually do remember that.
You see, homes around 400 grand. So you already bought at a loss. You know, so if you took advantage of Bank of America's situation, now I'm not saying that they did it on purpose to be predatory,
but it was one of those.
It was one of those situations. So if you didn't know how to buy, and you took advantage of that interest rate at 0%, zero down, at an interest rate on that average time was roughly around 7%, right?
Yeah, it was a 7.4, I think, was the average.
Right?
And most of the time, that's for individuals with good credit. So you can only imagine what it was for individuals with average to subpar credit.
That's what I'm saying.
Those are the individuals, sadly, were the individuals getting the 0% down.
Yeah.
So it was like a perfect storm at the worst time.
At the worst
right?
time. Exactly.
I'm going to continue on with the article. It says, the decline in value is attributed to an increase in mortgage rates, which has led to Americans being more reluctant to buy homes and prices dropping. Yeah. So, I mean, that one's a little bit more, it's pretty easy to understand.
Right.
I mean, if supply and demand, if there's no demand, I mean, price is going to have to drop if you have to sell.
Exactly.
Right? So, I mean, at some point, we anticipated this would happen. And anyone who follows you on Instagram and follows me on Instagram would know that as an investor, you don't buy market. I mean, you can't buy market, especially especially if you're trying to use these as rentals. It's just not going to work.
It's just not going to work. And then that's the biggest thing. So there's a lot of different formulas out there that you can take into advantage of to try to keep yourself out of trouble. Now, I was talking, when this came out, and I'm talking about Bank of America's situation. When it came out, I was telling people, make sure not to buy no more than 85% of the value. Exactly. So, because you got to remember, these people are listing properties, right? You're listing a home, and a home could be listed 20, 30,000 over the average for the area.
Yeah.
And people were buying it, right?
Yep.
So you're buying it at an accelerated cost, at a
Yep.
very high cost, and not knowing that you're putting yourself in a hole.
Exactly.
So it's really important as an investor, right? And I'm not saying everybody who's watching is an investor, but to be sure when you're buying this property or you're spending this amount of money, because remember, this is one of the biggest, if not the largest expense you'll ever have in your entire life.
Most Americans, a home is their most valuable
The
asset.
most valuable asset.
Yep.
Make sure you're buying it with thought in play in case something happens down the road. Because if you're buying it as a fixer-upper and you're buying it at 70%, which I buy at 65 to 70% of the ARV,
Yeah.
keeps me out of trouble from this.
Yeah. So, but you know what was interesting?
What's that?
It was segmented. Now, of course, not all markets are going to be able to take the same hit, right?
Right.
It's funny enough that some of the worst areas hit were the Bay Area. According to the article, it says the report also highlighted that the Bay Area had seen the biggest drop in real estate values compared to other parts of the world, other parts of the U.S. So, I mean, that was something you'd expect. Meanwhile, Florida housing market has remained robust with the largest increase in real estate values compared to other parts of the country.
Yes.
This is important as to why. If you remember, a lot of the East Coast, the New Yorkers and some Californians moved to Florida.
Right.
So the market there was less resistant to a drop in prices.
Right.
As you had all these individuals moving there,
Yeah.
there was still a demand, and it was just still the supply was just not there. So that's why these area like South Florida, where I frequent, we didn't see a drop.
And that's
We
okay.
didn't see a big enough drop.
And it's okay. But, and even in certain markets that I invest in, because I invest in the Alabama market, we invest in Houston, Texas, I invest in all over the country in some of the areas. It's really just comes down to, are you buying in an appreciating market or a depreciating market?
Yeah.
Are you going to buy in a place that people are moving away from versus are you buying into a place that are moving towards? I wish we could have brought up an article, but U-Haul has a really good statistics that they show where people are moving to.
Yeah.
U-Haul has.
you sent me that.
Yeah, they send it every year at the top of the year. They usually bring out an article and they bring out their data for where people are moving to. So if you look and focus on that as an investor, or even as someone who's looking for a primary home yourself, and you're looking to get out of where, if you're in California or if you happen to be in New York City and you want to relocate to a place that's an appreciating market, but you can get in there at a deal, I would pay attention to what U-Haul gets going on there. And then you can add on Redfin and pay attention to other people, YouTube channels like what we got going on here too as well. There's all kinds of great stuff that you can do.
So let me ask you this, Darlington. Now, what do you think? What are your thoughts on this? We've started to see home prices drop.
Right.
Is this? But then, yeah, interest rates are still going up, right? I mean, if you believe that we are going to see the recession, or we are going to see a market downturn, do you still think it's an ideal situation now to buy a home?
I would say
At market price.
at market price. No.
For the average American.
No. The best advice I've ever heard, and I still play by today, is instead of wait to buy, I buy and wait. Okay? So for those individuals who took advantage of the market, let's just say you did buy a home with the zero down program with Bank of America. Mm-hmm. Average person stays in their home for 5 years. Okay, before they look to sell and go somewhere else. That's because you take advantage of appreciations. So if the program luckily had been focused on higher inner city areas, Los Angeles, Charlotte, North Carolina, Houston, Texas, Atlanta, Georgia, things of that nature. So you can assume, and over the grand scheme of 5 years, there will be an appreciation, right? To even take advantage of or overshadow the decline that we're seeing now.
Gotcha.
So essentially, my answer is buy smart. Don't buy on emotion. This is not the market. This is not the time to just, hey, it's a pretty house. I got 7% interest or 8% interest. I'm just gonna do it. I can afford to rent. You never know what could happen.
I'll say this: I've been speaking to the realtors in the local area, and what they've started to see is multiple offers are starting to come out again. But now, of course, these offers are below what the asking price. But there is this new push that we are starting to see a resurgence. And as summer approaches, we start to face the hottest real estate market. It'll be interesting to see what the next 3 to 4 months brings, because I do think, especially if you live in the South, you're in South Florida or you're in Texas, you are going to see an influx of individuals from California, from the New Yorks, right? Yeah. So I think certain markets will be affected more than others, But I definitely think that we probably will see people buying homes in volume this summer, even though as interest rates are higher.
That's the thing, but it's going to be how many people can afford an 8% interest.
Yeah.
That's the crazy thing. How can you afford an 8% interest if you're buying
it at market?
If you're buying at market, right? So, I'm buying properties at $50,000, $60,000, $70,000 of property in Alabama. Yeah, I can have an 8% interest on that and still cash flow. Yeah. But I can't buy a home at the average of $388,000 and expect to cash flow that kind of property.
So it's funny you touched on it because that was something I was going to mention next. It's important for people to understand that if you're going to buy a home, the simplest way to look at it is, I always think about this. If I turn that home into a rental, does it rent right away?
Yeah.
And I think a lot of times people forget that, and that's the simplest way. And what you basically need to do is you go up and you look at what the rental comps are in that area that you live in for a home of that size. The next thing you do is you find out, okay, this is basically what my mortgage needs to be or below this, because guess what? If you're banking on refinancing, refinance rates are automatically lower, or they're higher than
what
a purchase rate is.
Right.
So a refinance rate is not going to be, let's just say rates do drop to 4 or 5. Your refinance rate is going to be at least 0.5% greater than that, just an FYI. So I think it's definitely interesting that I wouldn't be buying unless the numbers made sense, because that's really what it boils down to. Now, of course, most people aren't investors and don't know how to, but that's the point. That's why you learn how to be able to kind of navigate real estate markets, because I was able to buy in December of 2021 in the hottest market at below asking price.
Yeah, and that's a good deal.
But I knew, and the individual that I wanted to buy the home from was hell bent on selling it above. But I said no. I was like, this is my price, and that's it. Now we ended up meeting a little bit more than what I thought was the ideal number. But I got in the house, and the value rose about 10%.
Exactly. But what you did is you bought defensively.
Yeah.
So I think where the answer is for most people is you need to purchase right now in this market. If you're looking for your primary home, buy defensively. When I mean by buy defensively, don't buy at asking. You can't. It's not smart. Anticipate that if it is a 10 to 15% decline, that's the price that's the ceiling that you want to be at.
Yep.
Take your offer price that you're okay with and drop that by 15%, just to play it safe. Yeah. Because if the market interest rate continue to climb the way it is, obviously demand is going to be significantly lower. And then another thing too, people are just climbing on with too much debt. Yeah. Let's just be realistic.
Yeah.
The average debt that people are getting is we're in trillions and trillions and trillions of dollars of debt. And this is not debt the country's in. This is just the consumer debt. Yeah. You know? So if you're in trillions of dollars of debt and consumer debt, you are putting yourself in a situation you're not going to get the best interest rates.
No.
You're not. You're just not going to get the best interest rate. Yeah. Also, I would say if you do have the best situation, you do got to buy now. Find a way to get a lot of seller concessions. Okay. Yeah. Find a way to get the seller to pay for closing costs. Find a way to whatever.
Get the washer, dryer.
Get as
many things for free.
Everything you can.
Decreasing the cost of what you're going to have to buy or finance. Because a lot of times what individuals are doing is they're taking credit cards and they're putting the washer, dryer, the fridge. You got to be able to cut your losses and create wins. Because in this market, the buyers actually have a good amount of the leverage if you know. But if it comes summertime, it's going to be ugly. I think we're going to see another arms race for housing. So
it might be an arms race for housing, but I think honestly, most people are just going to have to, stick to their guns.
Yeah.
Ensure that they're not biting off more than they can chew.
Yeah.
Because this is in the market to buy the extraordinarily big house or the super fancy car with interest rates that are up the yin yang. Nah, it's just not it. It's too expensive for money right now. So play safe. It's just you need to play safe in this market.
Yeah. I mean, on that note, I think just to kind of wrap it up, I think it's going to be interesting to see what happens. We're going to keep you guys updated as far as on the housing market and the situation. So make sure to like and subscribe and hit that share button if you like the content, you want to see more content like this, okay? And once again, it's Buka here, the Scrub Investor. Until next time, see you.